Would Warren Buffett buy Bitcoin? In this episode of Bitcoin Finance, we're going to be applying the logic and principles of value investment to the concept of stacking sats. Let's see whether ultimately Warren Buffett or someone following value investment principles, what their thoughts would be on the idea of Bitcoin as an investment. Is value investing consistent with stacking sats? Well, typically, there's a number of areas and metrics that value investors use when assessing opportunities of buying companies. And one thing in particular that is important is that they can measure a company and ensure that it's good value. One way of doing this is to look at the value of those assets. Clearly, if the value of a company's assets are trading below or are valued below the total market cap of that company, that would indicate that that company is of good value or below value. That would be of interest to a value investor. A value investor calculates and looks at a company based on its future prospects, on what its future earnings are likely to be over the likely life of that company, and then comparing that or discounting that back to what would otherwise be earned on cash. And these days, of course, cash is earning very little, or in fact, even losing money, both in investment terms and in real terms in terms of purchasing power. So a typical value investor would perhaps on these metrics find an investment of Bitcoin to be problematic or undesirable, given that Bitcoin doesn't have a calculable inherent value, or at least one that might be very difficult to calculate, and one which doesn't produce a yield. And similar to gold, when there is an asset that doesn't produce a yield, a value investor using traditional valuation metrics might struggle with those metrics in attributing a value to Bitcoin. And hence the conundrum, and why it's quite fascinating to me to see that people who are hardcore value investors, and that includes myself, people who base their investment philosophy and decisions on mathematics and logic, why it is that some of these people who may, in fact, probably all at one point expressed skepticism over the investment potential of Bitcoin have started to move over and at least recognize that Bitcoin may be worth something to invest in, or in actual fact have become quite passionate about investing in Bitcoin and really do see value in such an investment. And I sort of refer back to what I'm listing here as the Preston Fish dilemma. I'm not sure if I'm pronouncing your name right there, Preston, but I thought it was interesting on the Investors Podcast, which is a regular show that Preston and various colleagues host, where they talk about investments. And typically there's a strong theme of value investing that goes that applies throughout what they talk about. And then at a certain point, I'm not sure when exactly, 2017 or 16, or maybe it was 2019, one of the presenters, Preston Fish, really took a strong interest in Bitcoin, and after a period of time became a strong Bitcoin advocate. And clearly, of course, since the time that he started advocating for Bitcoin, it's become a very good investment. That doesn't mean that his logic was sound. We'll get into that in a moment, but it's certainly been a good investment for anyone, almost at any point in time, who's invested. But what I found interesting, and I think Preston has remarked on this himself, is how it is that someone who's a value investor has the shift in mindset to not only consider Bitcoin, but then not dismiss it, but ultimately come to the conclusion that it is something worth investing in, and it is something worth advocating for, and it is worth something educating others in. And we've seen this. I see a real dichotomy now. I see some very smart traditional value investors who have strong skepticism of Bitcoin, maybe to the point that they haven't even explored it in depth. They've simply dismissed it outright as a Ponzi scheme and all the other types of typical FUD that you hear in relation to Bitcoin. And then there are others that have moved over and have strong reasons as to why they believe Bitcoin is a good investment, despite themselves being hardcore value investors. So the question that I think many ask is whether buying Bitcoin isn't entirely contrary to the ethos and the core principles of value investing. And that's what I plan to look at in this presentation here. The core Buffett principles, that there's no single unified list as far as I'm aware of what Warren Buffett's investment principles are. You could probably find 100 different principles, but there are certainly a number of very strong themes that come out in his various writings and interviews and annual reports. And some of these are very well known. Some of these are perhaps take on different interpretations. Some are not that well known, and some may be misunderstood and misquoted. But what I'm going to be focusing on is really some of the very well-known principles, and then applying those and having a bit of discussion around how we would apply those to Bitcoin and what Buffett would think in terms of applying these principles to Bitcoin. Well, as we've talked about earlier, Bitcoin produces no yield. And we all know that Warren Buffett has at many times criticized gold as being unproductive. It's at best perhaps a clumsy store of value. It just essentially lies there and looks shiny and costs money to store and does very little. So he hasn't been a gold fan, although at certain times I believe he has owned gold miners, and I think he also owned silver at one point, a significant amount of silver. But in any case, we'll get into the gold mining discussion as we get into the presentation. But on that metric, at least, I think one could say and one could understand why Buffett doesn't like or has concerns with Bitcoin in the sense that it doesn't produce a yield, and there's also great difficulty in measuring its intrinsic value. I would note, however, that it has become clear, I think, to many of us, including value investors and including Warren Buffett himself, is that there can be growth in a company, and that company can essentially not pay out any yield, but it can retain those earnings and continue to accumulate and grow in value without actually paying its earnings out. And in fact, even a high yielding company, Warren Buffett would often take that yield that was paid out and prefer to see it reinvested back into the company, which would provide him a better return on that money than that money being in cash. So we've seen more in more recent times Berkshire Hathaway, as a result of some of the up and coming younger investment managers, make a move into Amazon. Amazon has had a very patchy history of actually paying out earnings, and what it's done is repeatedly run on some metrics at a loss, but those losses have been offset by an increasing assets on the balance sheet, because it simply reinvests its money time and time and time again. And we've seen that since the early days of Amazon. So the overall value of Amazon, the overall market cap, is now huge. It's over $1 trillion. So I think we can accept that a company doesn't necessarily need to have a yield or even positive earnings to be something which accumulates value over time. So what about the well-known Buffett principle of only investing in what you understand? Certainly this is a great reason for not investing in Bitcoin or in any technology company, or indeed in any type of business that has concepts that you don't understand. Warren Buffett's, and I'm paraphrasing here, but one Buffett quote is that there are many great companies out there, and he's often criticized when he misses certain tech companies. Why didn't you invest in Google or Facebook or whatever? And his answer is there's so many great companies out there. My role is not to make sure I invest in every great company. There's a lot of companies I don't know a lot about. They might be good, they might not be good. But my role and my secret to success has been to make sure that when I invest, I get it right. And he uses the baseball analogy of lots of balls being thrown at him. He doesn't have to strike at a lot of balls, but when he sees a ball in the sweet spot, that's the one he's going to strike at and hopefully hit a home run. And so in doing that, it helps if you stay within your comfort zone. From my perspective, I'm not necessarily an expert in biotechnology. So I would probably stay away from a biotech company, particularly an early stage biotech company, because I just don't necessarily have the confidence that it's an area of my expertise. On the other hand, if I had a particular strength, let's say in online sales or in media, in new media companies or in fintech, that might feel, straightforward consumer retail type company, that might be something that I could find far easier to value. So clearly, like a lot of us, I think we would stay away from something that we don't understand. And this probably explains why a lot of value investors stayed away from Bitcoin, and why many value investors, if anything, perhaps would only invest in Bitcoin and would stay away from other far more speculative types of cryptocurrencies if they were to invest at all. So clearly, Warren Buffett and Charlie Munger, they don't even need to devote the time to understand Bitcoin. And why would they? I think they would probably be themselves admit that they don't have the aptitude to understand it. Warren Buffett, I think, struggles to even really make good use of an iPhone, although he has figured out that Apple is a good investment. So it would be a little far-fetched, I think, or perhaps understandable to understand why men in their late 90s or whatever their ages are, late 80s, perhaps early 90s, don't have the desire even or the conceptual framework to even look into Bitcoin, let alone really getting into it at a deeper level. On the other hand, as we start seeing younger investment managers coming through, we might see a mindset shift in that regard. So some examples here are Google and Facebook. Warren Buffett missed investing in both of them. That didn't make them bad companies. In fact, they were incredible companies. But at the time that they IPO'd, I recall, I think in relation to Google, Warren Buffett saying that Google may be a great company, but it comes at a great price, and it's not something I fully understand. I'm not prepared to put my money towards it. Whereas I think if you looked at those companies now, post-IPO with 10 or 15 years or whatever it is behind them in terms of maturity, he might well want to own those companies given the various things he looks for. I don't actually know whether he owns those two. He clearly does own Amazon, Apple, Microsoft, etc. So once a company gets to a level where it produces certain metrics that he feels comfortable with, he then may well change his tune. So why did Charlie Munger call Bitcoin rat poison over the last few years? And I think he doubled down on that statement a few times. And I don't know whether he's going to change or not at his age, and perhaps with his level of stubbornness, arrogance, I don't know what you would call it. I suspect he will double down, but who knows? I think actually Buffett might be more inclined to change his view on this, and perhaps the younger investment managers even more so. But why did Buffett call Bitcoin rat poison? Well, from my perspective, whilst he hasn't fully explained it, I think the concept here is that you put rat poison into some kind of liquid, the rat licks that poison, the poison makes the rat incredibly thirsty, and so to quench its thirst, it licks more and more of that poison and becomes sicker and sicker until eventually it dies. So to some extent, perhaps what Charlie Munger views Bitcoin as is being a kind of black hole of money. It starts off as something that's very small, and the more money it attracts, the more people it attracts, the more gravitational force it has, and the more wealth it sucks into it, if you like, or accumulates into that limited supply of Bitcoin. And that, of course, explains why the value of Bitcoin has increasingly gone up and up. So this is potentially why Charlie Munger might call Bitcoin rat poison. I think there are probably other aspects to it as well, including the fact that maybe he views it as a Ponzi scheme, or maybe the fact that it only has value because other people are prepared to give it value, and there's a sort of a cyclical effect there, which is quite different from value which arises from a company because of the yield that it produces. But looking at it from another perspective, Bitcoin is arguably also one of the best, investment and value accumulators of all time. Bitcoin started at a value of 0, and for various reasons has created an almost virtuous cycle, if you want to put a positive spin on it, of increasingly creating value and potentially being able to do this on an almost infinite and perpetual basis. It's almost an unlimited value creation machine, which is something that's phenomenal. And there are theoretical discussions about where the end point of that cycle might be, and that's something, and whether it will taper off the rates of growth, and that's a discussion for a different point in time. But putting a different spin on it, you could well see how Bitcoin could be a value creator, which someone like Buffett would absolutely love. What I think the problem is, and what someone like Charlie Munger really struggles with, and maybe he hasn't articulated it, is that Bitcoin does not have the metrics that give traditional value investors like Buffett an edge over the market. The market in the early days of Berkshire Hathaway, and even now, although arguably less so, has a multitude of very obvious inefficiencies. And the core of value investing is to be able to look at a market, look at a company, value it compared to the market price, and then figure out with various degrees of certainty how undervalued that company is compared to its fair value, or how overvalued it is compared to that fair value. And that becomes very easy to do when the company is predictable and simple to understand, and when the valuation is there because it's a market valuation, and assuming that the market is going to exist for the stock in this company, you will know that over time money will flow to where there is value. Investor money will flow. And so somebody like Buffett and Munger, and indeed a lot of value investors, they would struggle with something like Bitcoin and perhaps be frustrated with it and seeing it go up because it doesn't have those traditional metrics that they would look at. Let's look at the rule number 1 of Buffett: don't lose money. And this is something I think a lot of Bitcoin investors or potential Bitcoin investors who are value investors struggle with. They struggle with the fear that Bitcoin may eventually go to 0. And so when Buffett looks at a company, clearly he wants it to go up over time rather than down, but he is definitely not concerned with short-term volatility. And indeed, if he sees a company that he likes and its value halves, he may well buy more of it. If his value stays the same, but the price of it halves. What he doesn't want to do is to have his capital wiped out. And that's one reason why he doesn't take leverage usually. And so applying this question to Bitcoin, Bitcoin definitely is volatile. It goes up, it goes down. But will you ever lose your entire investment in Bitcoin? And I think the answer there is quite likely no. I don't think it's ever going to go to 0. Now, you may query how much Bitcoin may go down from its current level at any point in time. Could it go down 20%, 50%? Will we ever see another 80% drop? Maybe, but will it ever go to 0? probably not. Whereas a lot of companies obviously do go to zero, and that's when they go bankrupt and into liquidation and no longer cease to exist. So a lot of people do confuse volatility with long-term value. And I think that's one thing that value investors, we all need to get our heads around. If we believe that a company or an asset like Bitcoin has likely long-term growth, then provided we aren't taking leverage such that we get liquidated, we need not be concerned with short-term volatility. If, in fact, if anything, we could take advantage of volatility as a good entry point. And so here I'm posting a quote from Buffett along the lines of where he said, if you're not willing to hold it for 10 years, don't even think about holding it for 10 minutes. And Buffett has made the point many times that to be a good value investor, you need to have a long-term mindset and the right temperament. I have friends who are day traders, and I have friends who also really struggle when they see Bitcoin move up and down. They usually don't mind when it goes up, they get excited. When it goes down, they say they're never going to invest it again. And so, again, there's a lot of confusion here and in terms of people's psychology, but I think anyone applying value investing principles to Bitcoin needs to go into it with the view that they should be hodling. And there are a lot of reasons for that, but one is that the longer you hodl, the more you ride out the volatility, and assuming that you believe there is a long-term trend, the greater your likelihood is of realizing that long-term trend. And then we also know with traditional stock investing that some of the largest movements and gains in a stock come over very short periods of time. I don't know the exact statistics, but if you lost out on the 10 largest movements on the Dow Jones, for example, over the last 50 years or whatever, you might be significantly down. Some of these movements can be huge. And this is even more so with Bitcoin. So it's probably far more important to be in the market long term than it is to realistically believe that you can time the market. The other point about volatility here is, and this is quite separate from valuing. I'll get onto the valuation discussion in a moment, but regardless of that, Warren Buffett would always want to buy an asset at a time when everybody is panicking, when there's blood on the street. And similarly, he would like to be cautious when others are greedy. So applying those principles to Bitcoin, one thing we have to look at is where we believe Bitcoin is in terms of sentiment. And we've seen time and time and time again throughout Bitcoin's history, whenever there's been a huge sell-off and a lot of negativity, that's been the best period of time to buy. And whenever there's been a huge amount of optimism, and we saw the extreme of that when Bitcoin hit 20,000, I think it was in perhaps in early 2018, and various other cycles, that's the time that clearly would have been the best to sell off. Now, I'm not suggesting people try and time Bitcoin, but I think there is some validity to saying that when you see a very sharp rise in Bitcoin over a short period of time, that could be a good time to sell it. And similarly, when you see a very sharp downturn over a short period of time, that could be the ideal time to buy it. But these things can be easier to assess in hindsight. And for a lot of people, I would still recommend, regardless, don't try and day trade and look at short-term patterns. Simply buy and hold if, again, you believe that Bitcoin does have a long-term upward trend. The other point about losing money is whether or not you are in fact even losing money if your store of value itself is Bitcoin or are sats. If you buy a certain number of Satoshis and that is that's your way of measuring your value, you've actually lost nothing. If you have a Bitcoin, whether a Bitcoin goes up or down in a particular currency is irrelevant. And for most people, Bitcoin is not their unit of account. They might typically use US dollars or their home country's currency. But increasingly, I have seen people around me of various ages and various degrees of financial sophistication actually measuring their wealth in sats. And so that surprised me as well, to see people make that mental switch from US dollars to Satoshis And so to the extent that you start using sats as a unit of account, and I think we may well start to see that more over time. We're starting to see more companies put sats on their balance sheets. We're starting to see more high net worth individuals have some of their value in Bitcoin. And in particular, we're starting to see some people have almost all their value in Bitcoin. And that's again another conversation for another time. But I do know people who live entirely in sats, who are kind of digital nomads who travel the world living entirely off their Bitcoin and the Bitcoin earnings. And so they clearly measure all their wealth in sats. So my point here is that even if Bitcoin goes down or whether it goes up, from a Bitcoin unit of account perspective, nothing's been lost. You have the same amount of Bitcoin. So Buffett likes to buy a great company at a sensible price. And the biggest problem with Bitcoin is how to value it. I've done separate presentations on this topic, and this is, I think, one of the areas where people have the biggest problem with Bitcoin, is that it's very difficult, if at all, not possible at all, to give Bitcoin an intrinsic value. If you look at the typical metrics that a value investor would use, such as Buffett, we look at things like return on equity. We might look at the historical earnings growth of the company, its current price earnings ratio, or its price earnings ratio over a period of prior years, its price to sales, its net asset value compared to its market cap. And there are a range of metrics there which I always use and which value investors would always use in terms of valuing a company and figuring out whether or not that company is valued below fair value. You can't do that with Bitcoin. As I've explained in prior prior presentations, what Bitcoin really comes down to is a function of supply and demand, and it's the supply of Bitcoin versus the demand for that Bitcoin, which ultimately determines its price. So for someone like Warren Buffett, he's only left with having to figure out whether or not, given the limited supply of Bitcoin, which we all know, whether there will be over time an increased demand for that Bitcoin or not. If he knew with certainty, or he had a high degree of confidence, that demand for Bitcoin would be increasing over time, he would likely be buying Bitcoin. But I don't believe he has sufficient certainty. And it's not the typical way that he invests. He can't look at it immediately. If there was a very reliable way of forecasting future demand, and he saw that the supply and demand metrics led to a future price which showed that it was currently far undervalued, then he clearly would buy. But I don't think that the metrics are there that has given him sufficient confidence. So this is why typically a value investor would struggle with applying this kind of approach to Bitcoin. They can't determine using traditional metrics what the price of a Bitcoin should be. Another thing that value investors look for, and which is really important to myself and to Warren Buffett and others, is the quality of a company's management and its governance. And I can't tell you how many companies I look at that I simply dismiss because there's been problems in the past with management, with corporate governance. It's also a reason why I think many value investors also struggle and stay away from IPOs, is that we just don't necessarily have the track record of the management in place to feel comfortable. So let's look at Bitcoin. If Bitcoin was a company, and Bitcoin's interesting because it to some extent, I think you could say it is managed. It does have people who, in some ways, all make a decision which impacts that company, or whether it's a company or not, that asset. How would Buffett feel about how it was managed? Well, here I'll refer to Charlie Munger, and Charlie Munger's one of his I think this is a Munger quote, at least I think it's been attributed to him, is show me the incentives and I'll show you the decision. And this happens a lot in the area of politics. It also happens a lot in how people run companies. If you incentivize a salesperson or if you incentivize management in a certain way, they will run that company which aligns with how they best get rewarded under those incentives. So if you give the people managing a company a huge amount of upside in terms of stock options, you'll find that they do a whole bunch of things that will aim to increase the value of that stock. If you incentivized them in another way and you gave them certain performance metrics where they had to hit certain sales targets or certain revenues or certain profit margins in order to receive certain payments or bonuses, you would find that they would start to focus on those particular areas. So what are the incentives around Bitcoin and the people that manage Bitcoin? First of all, who does manage Bitcoin? It's not Satoshi, as some people perhaps misunderstand. Bitcoin is essentially managed by all people involved in the Bitcoin ecosystem. It's managed by the miners, it's managed by the people who run the nodes, it's managed by every person who owns Bitcoin. So you have a very unique management structure. In some ways, you have no management at all. In some ways, it's decentralized. But if you look at the incentives, there are a whole range of consistent incentives behind Bitcoin, which I think are really quite fascinating and which arguably is very positive to applying this metric to Bitcoin. Are the incentives of the managers of Bitcoin aligned with the shareholders? Well, the shareholders and the owners of Bitcoin are the same people. And so to some extent, Bitcoin is ultimately, if you were to look at it as a company, the ultimate tech company. Every single shareholder is a manager, and every one of those shareholders / managers are aligned to ensure that the company performs and continues to perform. You have the most perfect alignment here of shareholders and managers who essentially are one. And I think this is a concept which people may look at over time in terms of business model, and it's something I could talk about much longer and make the subject of a whole presentation. But I think arguably, to some extent, you could make the argument that Bitcoin is almost the ultimate technology company. Everyone plays a part in the ecosystem. Some people have different strengths in different areas. You see some people, their strength may be in social media. Some people may be on the technical side, the technology side, the finance side, the banking side, the legal side, the educational side. You have so many different stakeholders, but ultimately, once they are a stakeholder, they are aligned and incentivized in ensuring that Bitcoin will succeed, thrive, survive. There's no reason for anyone to want to undermine it. And any benefit that you give to yourself as a Bitcoin hodler in terms of increasing its value is something which everybody else who owns Bitcoin obviously also benefits from. So it's a fascinating model of incentives there. One thing that Buffett has always looked at, and which to some extent I believe is perhaps a little bit misunderstood, is the concept of a company having a strong moat. And what some people believe this means is that he looks for companies that have a very high barrier to entry. Now, clearly that's one way of interpreting this, and that is certainly something which would be ideal. I mean, if you're a company such as Qualcomm, or a pharmaceutical company that makes a compound which you have patents over which nobody else can make, or you have a particular technology platform such as Microsoft where it's very, very hard for anybody to realistically compete, then yes, these are companies that have strong moats. But they may not be, the lack of competition may not be the only definition of what constitutes a strong moat. And one criticism of Bitcoin perhaps is that there are arguably very low barriers to entry. We often hear, and this is something that I struggled with, and I think many value investors struggled with, the concept that anyone can create a cryptocurrency. There are hundreds of thousands of cryptocurrencies that exist that have been created. Some are still alive, most have effectively died, but the barriers to entry are in theory very low, and that's why we see these so-called alts, or some people might refer to them as shitcoins, that come and go. So intertwined and perhaps building on this concept of having a strong moat, it's beyond just barriers to entry. The things that really create the moats are things like the branding, the trademarks, the intellectual property that is protected, and not just that, but the societal entrenchment or preference for a particular product. And a great example of this are some of the Buffett investments in companies like, let's take Coca-Cola, for example. There, over the many years, have been hundreds of versions of Coca-Cola. We might remember Virgin Cola and Dr. Pepper's, and there's still Pepsi. Pepsi's still around, I think. But and perhaps Pepsi is, you could to some extent argue, Pepsi is the Ethereum to Bitcoin. Maybe that's not a perfect analogy, but the point is that there is one clear leader, and once that clear leader becomes entrenched, it's very, very hard to be displaced, even though the theoretical barriers to entries may be low for a whole range of reasons: network effects, nostalgia, first market mover, biggest market share, etc., etc. You'll constantly see entrants come and go with the latest and greatest reason why they may be the better Coca-Cola product. They may come up with criticisms of Coca-Cola, but eventually they disappear. And we see this with Google. In theory, the barriers to entry to a search engine is very, very low, but search engines have come and gone, and over time, the dominance of Google and the entrenchment in Google becomes harder and harder to compete. And these products become intertwined with other things. You start to get intertwined into distribution systems, and if you take the Bitcoin intertwined into the banking system, it becomes very hard over time to usurp those. So Apple, Google, Microsoft, Coca-Cola, all of which are companies which Warren Buffett owns, and Berkshire Hathaway, they have strong moats, but they arguably, in theory at least, have low barriers to entry, but they remain undefeated. And there, I think there are strong comparisons to Bitcoin. Strong comparisons in the sense that the barriers to entry in theory are low, but in practice, because of the various other aspects surrounding these products, are very, very hard to displace. One thing that Buffett looks for is that a company must be able to survive through a wide range of macro factors. So Buffett really often talks about the fact that he really doesn't know whether there's going to be more money printing or less, or where inflation's going, or what the Fed will be doing. These are things that he doesn't take too much of an interest in. Rather, from his perspective, what's important is that a company is fundamentally sound and will thrive in a wide range of conditions. And so he makes the comment that his investments in Berkshire Hathaway has existed through periods of war, all sorts of political upheaval, and I don't know how many different times there have been different parties in power in the US since Buffett has been running his fund. Times of famine and plagues, inflation, deflation, high interest rates, low interest rates, currency fluctuations, GDP. There are some investors who do try and invest on these various types of themes, but what Buffett pretty much says is the opposite. And this is the approach that I've taken, and I think other value investors typically take. They might look at some of these things and be opportunistic, but the typical Buffett approach is to look at something that's going to survive regardless. So a great example here is Coca-Cola, and in fact all Buffett companies. Let's take Microsoft as well, or McDonald's. I don't know if he owns McDonald's or Burger King, but these companies are going to continue to exist pretty much no matter what. And provided there's a demand for these products, they can probably make a margin on those products over and above the cost of production, and they will continue to be good investments. So Bitcoin, There have been various narratives about Bitcoin and macro factors. It's one strong narrative is that Bitcoin is a defense to money printing. Um, and I think some of these narratives are correct and apply both in the short term or the long term. I think Bitcoin is also a bit of a chameleon in the sense that macro factors can change and people can tell a good story as to why the macro factors are now benefiting Bitcoin. I think you could make an argument, for example, on both why Bitcoin would perform well during inflation and deflation. You often hear these arguments around gold. Some people will tell you gold will perform great during times of inflation. Some people tell you quite the opposite. They tell you that gold is best in times of deflation. And I won't go into that discussion too much, but I think the point here is that over time, regardless of all of these factors, if you simply believe that there will be more adoption of Bitcoin rather than less, then clearly Bitcoin will be an accumulator of value over time rather than less in almost all of these examples here. So I think Bitcoin, arguably, so long as you do believe that the demand for it will increase over time, is going to stand the test of time. And so to that extent, it might well be something which falls within the things that Warren Buffett would look for when investing in an asset. So let me finish off with a few questions, including, will Berkshire Hathaway ever buy Bitcoin? I believe they probably will at some point. Probably when Charlie Munger or Warren Buffett sadly have passed away, but who knows? It's going to be really interesting. I would love to be a fly on the wall to the extent that they are having these discussions, because I would think that I forget what the other guys are called, Ted and Todd, or the younger investment managers coming up, may have brought up this discussion. I guarantee you that Warren Buffett has discussed the topic with some of the people that he consults with and some of the companies that he's invested in. One thing, of course, that would happen is that there would be an immediate Buffett effect. And just like we see when a high profile investor invests in something, or indeed when Warren Buffett invests in something, the stock price or the value of that asset immediately jumps up, purely because of the fact that other people think it's a good investment because Warren Buffett's bought into it. Now, he doesn't typically buy on that basis. I think he would be very conscious of it. And he could easily use that to make quick money by, say, buying 5% of a company and then selling 2 or 3% on the 20% jump based on the news that he's bought in. But that's not typically how he invests, and the value of doing that would diminish over time if that's the game that he played. But nevertheless, I'm just pointing out here that if he ever did, clearly he would be immediately in the positive because of the fact that the price would move up as soon as it was disclosed that he bought in. Whether or not under US SEC regulations he would be required to disclose his investment prior to making it, I'm not sure. I guess it might depend on what vehicle he used, whether he bought a substantial portion of a company or a trust that owned Bitcoin as opposed to putting it direct on balance sheet by buying it outright. That's an interesting one. And of course, I think if we looked at the range of assets in the Berkshire Hathaway stable, he clearly already owns Bitcoin directly. I guarantee you some of the banks or insurance companies, etc. I'm not sure whether he owns Square or PayPal. I think he has a stake in Visa or MasterCard. So he already has exposure to Bitcoin indirectly. And it may be that over time that they do acquire companies that have a more fintech focus. And to the extent they do that, or to the extent that it's a company that he already has that pivot over to holding Bitcoin, that's going to be interesting to see what view he and Charlie Munger take on a company. On the one hand, they say they leave those types of companies alone. They trust the management, but by acquiring Bitcoin and keeping it on their balance sheet, that would certainly be an interesting discussion. And I'm sure analysts and shareholders would be asking Charlie and Warren how they feel about a company that they own holding Bitcoin. I think Buffett's response would probably be, well, we trust them. We don't intervene in their investment decisions. We have our own views, but we're not going to put our foot down. Charlie's views might be somewhat more stern, and I'd be very interested to hear what he would say. So let's see if that comes up. I'm sure it's only a matter of time, provided these guys can continue to live long enough for that circumstance to arise. Now, Berkshire holds a huge amount of cash, and I presume most of it would be in US dollars. I don't know how much cash they would hold in foreign currencies, but over time, to the extent that Bitcoin is considered to be another form of cash or an alternative currency, then of course they might well want to hold it for a whole range of reasons, both what it can do, both in terms of diversification, in terms of what they can buy with it. Perhaps it's a nice hedge against the US dollar. So there's a range of reasons why a company already holding a lot of cash may also just simply want to hold some Bitcoin. Let's see whether they ever get their head around that. But I think that really is a possible justification. To Warren Buffett, cash is simply an option that enables him to buy companies at great value when that great value arises. And so he's repeatedly been criticized for not putting that cash to work. And I think one of the last shareholder meetings, a lady put up her hand and pointed out that if he'd just invested that cash into an index fund, he would have far outperformed that value of the cash that he had. And Buffett's response was, we're comfortable with the cash that we hold. We use that cash because it gives us great value at great times when assets are selling at great prices. But it would be interesting to see whether he ever allocates some of that cash to Bitcoin, again, even if it's only with the view of eventually deploying that Bitcoin as and when asset prices in terms of companies or other things he wants to acquire become incredibly cheap compared to that Bitcoin, which in a sense is an alternative to cash. What about Bitcoin miners? Would Buffett ever buy a Bitcoin mining company? I would actually say that yes, he would be more comfortable with a Bitcoin mining company than Bitcoin itself. I believe that he has in the past, or maybe even now, owns a gold mining company. And so I think his rationale behind that is that he may not like gold or be able to value gold, but he can look at a company that produces gold and see that there's a profit margin there and a return on equity that is very attractive. And so he could make the calculation that let's say gold, for whatever reason, holds its current value, even though he doesn't know how to value gold. Let's say it's very likely that gold is going to stay within the range of 1,600 to 2,000 US dollars an ounce, and that a company mining gold is making money at $700 an ounce. He could very well make a calculation that based on the stock price of that mining company is a good investment based on all of the key metrics that he looks at. And I think indeed that's what he's done. So he is taking he's arguably being a hypocrite in the sense that he doesn't like gold, or he believes gold can't be valued. So how could he buy a business that is based on the creation of something that has a valuation that he believes is irrational, or does not have any intrinsic value at all? But I think he would justify it by saying there's a long enough of a track record of this producer, which is creating this asset which has no intrinsic value, that at a certain price he would buy it. And so I think he would apply that same analysis to Bitcoin mining company as well. Now, what ratios he would need to look at before he became comfortable, and all the other things he would look at in terms of barriers to entry and management, etc. But I guarantee you that anyone, even if they're not a Bitcoin fan or not comfortable with it, could look at a mining company and could see a potential valuation at which point they would buy that company. And he buys energy companies as well. And again, to the extent that there's an ongoing demand, even though the demand may fluctuate for that asset, that for that commodity or that asset that mining company produces, at a certain point it becomes an attractive company to acquire. So yes, he would buy Bitcoin mining company at a certain point in terms of valuation. What about Coinbase? Coinbase is not so much a mining company as an exchange, although they do derive revenue from other cryptocurrency related type activities. But essentially right now, I think they make most of their revenue as in terms of operating their exchange. And I guarantee you again that regardless of what he thinks of Bitcoin, let alone all the alts, all the altcoins out there, he would look at that company. He would look at its growth, its earnings, its price earnings ratio. I don't even know what the PE of Coinbase is. Maybe it's 60. Maybe I had a look at it recently, and it wasn't as high as I thought. And that may be because of the view that there are other companies that are going to be competing, and also that its margins may shrink over time. But regardless, let's say at a PE of 30, would he buy it at a PE of 20? Maybe not. Would he buy Coinbase at a PE of 10? At a certain PE, he probably would. If he could look at Coinbase and assume that it's at a PE of 4, that its earnings over the next 4 years would essentially cover his entire cost of investment, he probably would buy it. It's always, of course, in comparison to the valuation of other alternative investments and the risk-free return that he could earn on cash. But at a certain point, obviously, he would buy a company such as Coinbase. And last question I'll pose here is, if Berkshire Hathaway had to buy a cryptocurrency, what would they choose, or what would he choose? So that would be a funny question to ask Charlie Munger, given his hatred for Bitcoin. But again, and I don't know if they would actually even answer the question, because they would be very concerned about how they are quoted or misquoted. So they're quite crafty in that sense. But if they had to, I guarantee you it would be Bitcoin for obvious reasons. We talked about the moat. We talked about rule number 1, don't lose money, and the fact that most alts eventually will go to zero. And we talked about things like market share, quality of management, nostalgic value, consumer recognition, track record, etc. So for all those reasons, if he did have to buy and was forced to buy a cryptocurrency, clearly he would buy Bitcoin. If he wanted more general exposure to cryptocurrencies in general, he would probably, I suspect, buy an exchange such as Coinbase, or maybe get that exposure through fintech companies, or simply his banking and his insurance investments that he has.